Imagine sitting in front of your screen. The market is moving. Your setup is there. The signal you've been waiting for has just appeared. Your heart rate picks up. Your mouse hovers over the buy button. And then, with a rush of doubt, you freeze. You hesitate for a second too long. The price moves without you. Now you're chasing. You jump in late. A small pullback hits your stop. You're out at a loss. Then the market takes off in exactly the direction you had planned to trade. You didn't lose because you didn't know what to do. You lost because, in that moment, you couldn't do it. That is the world of trading psychology Tom Hougaard lives in. It is a world where risk, fear, and execution are the real battlegrounds, not indicators, not secret strategies, not magic entries. In this video, we're going to unpack the core of trading psychology through the lens of Tom Hougaard's approach, how you think about risk, how you respond to fear, and how you execute under pressure. If you've ever known what you should do but still failed to do it when it mattered, then this is for you. Let's start with a harsh but honest truth that Tom emphasizes again and again. The market is not your problem. You are. Most aspiring traders think they need a better system, a new indicator, a different time frame. But look at what actually happens. Two traders can trade the exact same system, same entries, same exits, same rules. One ends up profitable. The other blows up their account. The difference is not the system. The difference is the trader's ability to deal with risk, to handle fear, and to execute consistently in real time. Tom spent years working with retail traders, watching thousands of trades, talking to people who had all the information, all the education, and still couldn't make it work. What he found was simple and brutal. Most people lose not because they don't know what to do, but because they can't get themselves to do it when money is on the line. So let's talk about money on the line. Let's talk about risk. When traders hear risk management, they often think about limiting losses. 1% per trade. Set a stop. Stick to it. Simple rules like that. And yes, those rules matter. But for Tom Hougaard, risk is not just a number on a position size calculator. Risk is emotional. Risk is how much pain you can tolerate without losing control. Think about your current risk per trade. Maybe it's 1% of your account. On paper, that's fine. But how does it feel when that 1% is actually on the table and price moves against you? Can you sit through the normal noise of the market without panicking? Or do you start tightening stops, moving them to break even too fast, or closing trades prematurely just to escape discomfort? Tom's point is that risk has two sides. There is mathematical risk, which you can calculate, and there is psychological risk, which you can only experience. Your mathematical risk tells you what you can afford to lose. Your psychological risk tells you what you can actually handle losing without falling apart. Many traders blow up not because their strategy is bad, but because their trading size is completely misaligned with their emotional capacity. They are trading too big for their own psychology. Every tick against them feels like a personal attack. Every trade becomes a fight for survival. Tom learned this the hard way, through painful losses and years of frustration. He realized that success is not about never feeling fear. It is about operating effectively despite fear. And that begins with sizing your risk to the point where you can still think clearly. Ask yourself right now, at what level of loss do you stop thinking logically and start reacting emotionally? Is it a $50 loss? A $500 loss? A $5,000 loss? That point is your psychological boundary. If you consistently trade beyond that, you are guaranteeing emotional sabotage. Now, here is where Tom does something different from most trading psychology voices. Many will tell you to make your trading as comfortable as possible. Trade very small. Avoid stress. Stay in your comfort zone. Tom's view is more brutal and more realistic. The market does not care about your comfort. If you want to extract serious money from the markets, you will experience serious discomfort. You will feel fear. You will feel doubt. You will feel pain. So instead of trying to eliminate discomfort, his focus is on training yourself to function while feeling uncomfortable. Think of it like going to the gym. At first, lifting a small weight feels heavy. Over time, as you train, the same weight feels light and you can handle more. Your emotional pain threshold in trading works the same way. If you size your trades sensibly and you consistently expose yourself to the stress of real risk, you gradually build capacity. But this only works if you do it in a controlled, intentional way. If you go too big, too fast, your nervous system goes into panic and you lose the ability to learn. So, with risk, the balance is this. Trade small enough that you can still execute your plan, but large enough that the outcome matters to you and forces you to grow. This is the zone Tom wants traders to live in, the zone of meaningful but survivable discomfort. Now, let's talk about the emotion that colors almost everything you do in the market: fear. Fear is not a sign that you are weak. It's a sign that you are human. The problem is not fear itself. The problem is what you do because of fear. There are several forms of fear that Tom sees again and again. The fear of losing, the fear of missing out, and the fear of being wrong. The fear of losing is obvious. You do not want to see red on your screen. You do not want to feel the sting of taking a loss. And so you do all sorts of things to avoid that feeling. You move your stop further away. You refuse to exit a losing trade. You tell yourself it will come back. You turn a controlled loss into a disaster just to avoid clicking that close button and admitting defeat. The fear of missing out shows up the opposite way. You see the market move without you, and suddenly you feel desperate. You don't want to be the one who missed the big move. You start chasing entries. You abandon your plan. You enter late with poor reward to risk just so you can be in. And then there is the fear of being wrong. This one is subtle but powerful. Being wrong threatens your ego. You don't want to admit that your analysis was incorrect, so you cling to your views long after the market has invalidated them. You add to losers because the market is crazy. You ignore your stop because you know price will reverse. You make the trade about your identity instead of about probabilities. Tom Hougaard's answer to all of this is radical acceptance. He talks about becoming a professional loser. That sounds strange, but listen carefully to what it means. Every successful trader loses. A lot. Losses are not a sign that something is broken. They are a normal, essential part of the game. Tom's own trading is aggressive. He goes in big when he sees an edge. That means, by definition, he has to accept the possibility of big losses. He doesn't enjoy them, but he respects them. He expects them. When you resist losing, you suffer twice. You suffer when the trade goes against you, and you suffer again when you refuse to take the loss and let it grow. When you accept losing as a cost of doing business, something shifts. The loss still hurts, but it no longer feels like an attack on your identity. The moment you say to yourself, "My job is not to avoid losses. My job is to manage losses," you step into a professional mindset. You stop worshiping accuracy. You start respecting expectancy. You can be wrong often and still make money if your average winner is larger than your average loser, and if you keep your losing trades small and controlled. But that requires you to do something your brain hates. Take the small loss now to prevent the big loss later. Tom often frames it this way: you do not control your profits. You control your losses. The market decides how far your winners go. You decide how far your losers go. Your edge is not only in your entry, it is in the discipline with which you execute your exits, especially when those exits are painful. So how do you move from understanding this intellectually to actually doing it live? This is where execution comes in. Execution is the moment of truth. It is the bridge between knowing and doing. And under pressure, that bridge often collapses. Think about how you behave in replay mode or on a demo account. You see your setup, you take it. You follow your plan. It's almost easy. Then you switch to real money. Suddenly, the same setup looks less clear. You hesitate. You question yourself. You see ghosts in the chart that weren't there before. Why? Because in real time, with real money, your emotional brain steps in. It wants to protect you from harm. It creates stories. Wait for a better price. Maybe this one is different. Let's just skip this trade. It feels like intuition, but it is often just fear in disguise. Tom's approach to execution is not mystical. It is disciplined and brutally practical. He focuses on creating an environment where his rules are clearer than his feelings. The first step is defining your triggers in advance. Not during the trade, not while you are emotional, before you trade. What exactly has to be present for you to enter a trade? What price action? What level? What condition? If you can't define it clearly, you have no business putting money at risk. Then, once the market is open, your job is not to create new rules. Your job is to recognize when your predefined conditions are met and to act, not to think. To act. Tom often talks about rehearsing this mentally. Before the trading day, visualize your setups. See them forming. Imagine yourself placing the order with confidence. Imagine yourself also taking the stop loss if it hits, with the same calm acceptance. You are training your brain to see execution as a neutral, repeatable action, not a life or death decision. The next part of execution is dealing with impulses. During a trade, you will feel the urge to interfere, to move your stop, to close early, to add randomly. These urges are normal, but you are not obligated to obey them. Tom recommends having one simple question ready when you feel an impulse. Is this action part of my plan, or is it a reaction to fear? If it is part of your plan, execute it. If it is a reaction to fear, observe it, feel it, and let it pass without acting on it. This is not about becoming emotionless. It is about becoming non-reactive. The feelings can be there. You just don't let them drive the car. Now, there is another dimension to Tom Hougaard's style that is worth exploring: aggression. Tom is not a timid trader. When his conditions line up, he is willing to go in hard. He is willing to push winners. He is willing to hold during uncomfortable pullbacks if his edge is still valid. Many traders suffer from the opposite problem. They are aggressive with their losers and timid with their winners. They let losers grow and cut winners short. They are emotionally backward. To reverse this, you must make a conscious shift. Learn to be ruthless with losses and generous with winners. This means you cut the trade that breaks your rules. No debate, no negotiation. You exit. And when the trade behaves well and moves in your favor, you fight your urge to grab the small profit. You give it room to breathe. You follow your exit plan instead of your fear of giving back gains. Tom frames this as a kind of internal identity change. You stop seeing yourself as someone who tries to win trades. You start seeing yourself as someone who executes a process, who takes pride in following rules, even when it hurts. One practical way to build this is through journaling, not just of your trades, but of your behavior. After each trading session, don't just record your entries and exits. Record what you felt. When did fear show up? When did you deviate from your plan? Why? What story did you tell yourself in that moment? Over time, patterns will appear. You will see that you always cut winners early after a big previous loss, or that you skip valid trades after a losing streak, or that you suddenly increase size after a big win, trying to capitalize on momentum and then give it all back. When you see these patterns, you begin to realize something crucial. Your enemy is not the market. Your enemy is your unexamined reaction to the market. Tom's core message is this: you cannot control outcomes, but you can control your actions. And over a large number of trades, it is your actions, not your hopes, that determine your results. So how do you bring all of this together practically in your own trading? Start with clarity. Define, in writing, the kind of trader you want to be. Are you a day trader, a swing trader, a position trader? What markets do you trade? What setups do you focus on? What is your risk per trade? How many trades per day or week are you allowed to take? Then define your edge. Not in vague terms like, I fade extremes. actual, specific conditions. If you cannot explain your setup to a stranger in a few simple sentences, you probably do not understand it well enough to risk real money on it. Next, bring in Tom's perspective on risk. Choose a position size that makes you a little uncomfortable but not out of control. You should feel the trade, but still be able to think. If you constantly find yourself ignoring stops, you are too big. If you feel nothing at all, you are probably too small to care and may not be training the right muscles. Then, work on your relationship to losing. Before the trading day, tell yourself, out loud if you have to, I will take losses today, and that is fine. My job is not to avoid them. My job is to follow my plan. When a loss comes, do not rush away from it. Look at it. Is this a good loss, taken according to your rules? If yes, it is a success, even if it costs you money. If it is a bad loss, taken outside your rules, that is a failure of execution, and that is what you need to fix. Finally, commit to tracking your behavior. Not once, not for a week, continuously. This is your mirror. This is how you see the gap between the trader you think you are and the trader you actually are. Tom Hougaard's own journey was not overnight. It was built on years of mistakes, reflection, and an almost brutal honesty about his own weaknesses. He did not become successful by eliminating fear. He became successful by learning to operate in spite of it, by respecting risk, and by executing his plan with discipline, especially when it hurt to do so. The markets will always be uncertain. They will always move in ways that surprise you. No strategy will change that. What can change is how you respond. You can keep searching for the perfect system, or you can accept that the real work is inside your own mind. Risk is not just a number. It is your capacity to feel pain without losing control. Fear is not your enemy. Your obedience to fear is. Execution is not about brilliance. It is about doing the simple, correct thing again and again under pressure. Trading psychology is not a side topic. It is not something you fix after you find the right indicator. It is the entire game. Tom Hougaard's philosophy brings this into sharp focus. To win, you must become the best loser. You must accept that you will feel fear, that you will take losses, and that your success depends on how you behave in those exact moments. The next time you sit in front of your screen and your setup appears, notice what happens inside you. Notice the hesitation. Notice the stories. And then ask yourself, what would the disciplined version of me do right now? Not the comfortable version. Not the fearful version. The disciplined version. Then do that. That is trading psychology in action. That is risk, fear, and execution aligned. And that is the path Tom Hougaard points to for anyone serious about turning trading from a hope-filled hobby into a professional, controlled, and ultimately profitable craft.